Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, all eyes on the Fed today. Let's get folks set up with the expectations.
Yeah, well, obviously the Fed's going to potentially cut 25 basis points in today's meeting. There's over a 90% chance, if you're looking at the Fed Watch tool, that's going to happen. But I think the really big mover for this market is going to be the commentary after the release of the statement, as well as the summary of economic projections, which is really going to give us a little bit more of a path forward as to what we are going to focus on for 2026. If you kind of look back at the March projections, Diane, we pretty much hit on every single metric from the Fed except for GDP growth, which is actually better than what they actually expected here. So how do they position themselves for more rate cuts in 2026? I think that's going to be the biggest question. Right now we have two priced in. The next one being priced in is going to be for June, but that could obviously move as the economic data kind of rolls in over the next week and a half or so. And then the market's going to be focusing on the dissents. It seems like right now we are seeing or potentially going to have three dissents: one to cut more aggressively, Stephen Myron, and then two potentially looking to actually hold rates at this current level here. If we get another dissent within this pack, then that could also create a little bit of volatility. But the market is bracing for a hawkish cut, meaning that we do cut rates, but maybe we do pause here in the near term, really focusing on the data moving forward here. And that's really what we are positioned for. So any type of bright commentary or any type of optimistic commentary coming from Jerome Powell, as well as some of the other Fed speakers over the next couple of days, could actually remove some of that risk to the downside and obviously kind of slingshot us a little bit higher here. So once again, we're going to focus on it. Let's see how the market actually does with this meeting here. You are seeing volatility sitting at around 17.5 right now, so there is a little bit of worry in the market. But sometimes when volatility is leading up to an event or higher and leading up to an event, after the event, after we get that priced in, usually that does crush, and that's what could once again kind of move equities higher.
The question that I have, though, is how much, I guess, forecasting can Powell do, given that still a little bit in the dark on data? And then obviously there's the overhang of he won't be the Fed chair at some point in 2026. What's your take?
Well, there's a lot of third-party data that is out there the Fed is utilizing. Obviously, they're carrying a little bit more weight, like the ADP report that we get on a weekly basis now, as well as their monthly employment change number. So they're probably going to use that as a guide. And you are right, Jerome Powell is probably going to set it up so the next Fed chair can really kind of command the space and really give that vision moving forward. But he's still only one member. You still need the whole collective in order to provide a path for rate cuts moving forward here. So it is going to be a little bit difficult. I think he's going to continue to talk about being data dependent, still also talking about the employment risk in the market as well. You are seeing a divergence in some of the data points, especially when you're looking at ADP compared to what we are claiming from the government, and as well as what you are seeing from initial jobless claims. So it might be a little bit difficult. I think the market understands that for right now, but what we are really trying to focus on is when can we get the next rate cut? That's what the market's really priced in on, and that's why we are seeing the Russell making new all-time highs. You're seeing a little bit more risk on appetite and rotation in this market, and if we do not get that, that's where you could see a massive reversal in a lot of those sectors that have been benefiting over the last couple of weeks because of this bull steepener within the yield curve.
Okay, and so the focus, the cues today is on, in terms of market, is all about the Fed, essentially, and what things look like from here. Let's talk about some specific individual names that are on the move, on our radar this morning. GE Vernova, those shares rallying. I mean, it's been a massive power play this year, pardon the pun. What are some of your takeaways with regard to this update to the guidance?
Yeah, you are seeing a nice little breakout from this consolidation pattern that GE Vernova has been in for, let's say, the last 2 weeks, 3 weeks or so. But they did update their guidance when it comes to revenue, especially when you're looking at their 2028 forecast. Their new revenue guidance is looking at $52 billion by 2028 for revenue. Previously, that was $45 billion. They also adjusted their EBITDA margin to the upside as well, so profitability getting better for the company. They're expecting that now to reach 20%. Previously, they targeted that at 14%. If you're looking for the revenue guidance for this year, for the most part, a little bit more of a higher guide than the street's expectations, but I think it's the path moving forward, especially when you're looking at the margins. They have a backlog of orders, especially when you're looking at their gas turbines. I believe they're booked out for another 2 years or so, so demand is definitely ramping up for them, and they are noticing that, and they're leveraging price in order to expand those margins, and they do see a clear path moving forward here when it comes to their business. So we know that the power narrative has been within the AI theme for a very long time. GE Vernova has been able to move to the upside because of that, and it seems like that's not stopping anytime soon, according to their executive team.
Okay, yeah, I mean, look, and you got at least one analyst out this morning, actually a couple adjusting their price targets on GE Vernova. JP Morgan Chase raising it to 1,000 from 740. They're bullish. They're maintaining that overweight rating. Similar to Barclays maintaining overweight, raising their price target to a lesser level to 800 from here. So both see strength to come. JP Morgan Chase even more bullish. Palantir, I know you're across that. Shares moving a little bit higher this morning. Take us through the trigger.
Yeah, we are seeing Palantir ink a deal with the U.S. Navy here. This is really to try to integrate their AIP platform into the process of shipbuilding, as well as deploying their Foundry platform as well here. This is to actually streamline the process when it comes to building these ships and leveraging artificial intelligence, as well as centralizing a lot of their data to be able to make decisions, really cut down the time that it takes to produce a lot of these ships. And obviously, that's going to provide a lot of efficiencies as well. If you're looking at the dollar amount of the deal, it's around $448 million for the potential here. If you kind of look at it from a nominal standpoint, really not that much, but it is kind of entering into the space that it's gaining more government contracts. You're looking at AI being integrated into a lot of the industrial processes across the world at this point in time, and it seems like Palantir continues to take on that challenge and gain market share. So you are seeing a little bit of optimism there. Once again, the deal amount, the dollar size, not that great, but if you start seeing a lot more companies starting to look at these processes, starting to look at artificial intelligence and in trying to improve their efficiencies here, that could actually benefit them when it comes to margins, and obviously that's going to be a tailwind for Palantir. So a pretty decent win here. You did see a nice little pop here, fading a tad bit, but once again, a really good sign, right direction that you want to see, especially when you're looking at the balance between commercial and government contracts. And if we are able to see the proof of concept on the government front, on the privatized front, you probably will see more commercial business coming into this name over the next year, 2 years.
Okay, let's get your levels on the S&P 500 today. What's your target to the up and downside?
Yeah, very wide range. To the upside, 6,900. To the downside, 6,750. You are seeing a put side skew, so a lot of hedging activity taking place. That's why you are seeing the VIX at around 17.5 right now. Market's pricing in maybe some bearish commentary here, and if that's the direction that we're going to go, 6750 could be your area of support. If we do not get that bearish activity, I would actually look at breaking above that 6900 level, and this could be a day potentially where we do try to reach all-time highs, given the right circumstances and the right commentary come from Chairman Powell.
Okay, we will watch out for that. Certainly, I'm sure the Bulls want to see that, the right commentary, right perspective from their point of view from Chair Powell. Thank you, KG. That's Kevin Green, our senior markets correspondent.